Hey guys, welcome to the Smart Venture Podcast. In each episode, we're going to have conversations with some of the top investors, superstar founders, as well as well-known tech company executives in Silicon Valley. We'll have a coffee chat with them to learn their way of thinking and actionable tips on how they build or invest in a successful company. Before we start our show today, I want to make sure the listener, aka you, understand that everything a person say on the podcast only reflects hers or his own opinion, not the show or the company they work at. Our guest today is a co-founder and managing partner of Stage 2 Capital. Stage 2 Capital is a fund backed by more than 100 go-to-market executives from unicorns and the Fortune 500 companies. Their areas of expertise including demand generation, sales operations, account management, customer success, and other sales-related functions. He was the former chief revenue officer of HubSpot. He serves as a senior lecturer at Harvard Business School and is the author of the Sales Acceleration Formula. His name is Mark Roberge. In the last episode, we talked about how Mark started his career in tech and how Mark built up his personal board of advisors, as well as how he found a job that he is passionate about. In this episode, we'll focus more on how Mark transitioned from a sales leader to starting his own fund. Please enjoy. I think one of the factors to make HubSpot really successful is your other teammates are really good at what they do as well. So the product and other functions can power the growth. In your book, you mentioned that you were building a strong sales team by asking other sales executives friends from other companies for recommendations to go after their previous employees. They own your favor. So if someone doesn't have that network and the sales team is going from one person to two, how would you create the network for yourself?
I mean, you still have mentors like those first, if you're talking that early, Grace, like you're 0 to 5 people, like you're not putting a post on Indeed or LinkedIn for a job opening. You know what I mean? This is coming heavily from your network. And even if you're like a 22-year-old undergrad student, like fine, there's a lot of professors that are there to help you. There's a lot of like incubators out there. There's a lot of people that want to mentor you. And that's where it needs to come from, is just like networking and meeting people. And again, I would say, if possible, try the rent before buy on that side too. Like you can't always do that, but it's like, if I was looking for a technical founder and they're working at like Google or Facebook, like I would rather they, we do nights and weekends for 2 months together first before they quit their job and came on board, because those first hires, like that's the number one killer of startups at that stage is team. It's just the team dynamics, the hiring the wrong people, fights, all that kind of stuff. So that's a very important decision.
Yeah, absolutely. In your book, you shared a lot of experiences and perspectives from a sales leader standpoint. You're looking for someone with coachability, curiosity, and other traits in people you try to hire. If someone just started their career in sales or want to get in sales, what would you suggest them to do to stand out?
Yeah, I mean, some of the better, newer folks are like take their own career development in their own hands. They're out there. There's so many tools now, with like online education and stuff where you can go and just read a lot, practice, take online classes, etc. That's the best thing you can do. I would say the biggest misconception of selling is it's not about, people think it's about a provocative pitch, like being outgoing and like, the jock and good looking and like, very convincing. That's not it at all. It's about getting the buyer to trust you quickly and then leveraging that trust with open-ended questions to understand the buyer's perspective. That's selling. It's like I joke with my students often is like, next time, well, in COVID it's hard, but like next time you're at like a networking event or a wedding or even like, go over to a stranger and see how long you can ask them questions before they get pissed off. Because that's like honestly the best way I could summarize great salespersonship is like, if you can, like, I can go over to these people, meet a total stranger and ask them questions for like half an hour, and they don't feel interrogated and they don't get pissed off. And in fact, at some point they're like, I can tell that I'm like reframing their perspective, because they'll be like, that's a great question. No one's ever asked me that question before. And that is like the highest form of sales, is you can, through questions, you can reframe someone's perspective, right? And I've had people like go over to their wife after and be like, I didn't even tell him anything but my name. And they were like, that guy Mark, he's an amazing guy. And all I did was ask them a bunch of questions, right? So that, if you try to get down to like what is, early on, that's the skill set you're trying to establish.
I find that sometimes it's really hard to switch from a personal conversation into sales. After you ask them some questions, how do you make the transition? Do you say, hey, I have this solution for you, here's our product?
Sure, we can work on that right now. So basically, you want to build a little rapport so that like they trust you. And I like to frame, I want to get the buyer talking. And most of the time, it's as easy as like, hey, why did you take this meeting with me? Like more than half of the buyers will just start, this is what's going on. Let's take HubSpot as an example. Like, I took the meeting with you because we can't grow, we can't get the demand gen going, and then you're constantly just like dive into that. Well, what do you mean? What have you tried? Oh, we've tried paid marketing, we've tried cold calling, nothing's working. Like, why do you think? Why not? What happened with the cold calling? Why did that not work? What do you want to try? What have you, and of course I know what I want. Like, average salespeople will stop right there and be like, I got what you need. But no, I want to completely establish. I want them to be like closing themselves, right? So well, what do you think you want to try? I'm like, well, a lot of times they'll be like, I want to try blogging. And I'm like, well, why? Why do you want to try blogging and inbound? What do you mean by that? Well, I know we're getting creamed on the Google rankings. I'm like, okay, so you want to blog so you can get high ranks, and what would success look like? Like, how many leads do you need? Well, we really need to like double our lead flow by the end of the year. And what's the lead flow now? We're getting like 100 a month. Okay, so you need 200 a month. You're telling me that you need 200 leads a month, and the way you want to do it is you want to blog to do it. Who's going to blog and how often? I'm not really sure. Maybe you could help me with that. Yeah, I'll help you with that. Not right now, but I can help you understand that. And like, would you be willing to spend? So basically, this is the transition point, Grace. This is the transition that you're asking about. Is, okay, Grace, thank you for sharing all that with me. Let me just make sure I have it right. You can't scale your company because you can't scale demand gen. You've tried paid marketing and you've tried cold calling, and neither of them worked. And you think it's because your buyer is resistant to those and they're more online and intelligent. So what you want to do is you want to stand up a blog, possibly like 2 articles a week, with the hopes that it will increase your Google ranks, and that will double your lead flow, because you got to get from 100 to 200 leads by the end of the year. Do I have that right? And would you be willing to spend, say, $15,000 a year to do that? Right? I haven't told you anything about my product yet. All I've done is framed your problem, and I even frame like how much you might be willing to spend, and then like, and I might even say like, if I can show you that how to do that, and it's something that's going to cost you $15,000 a year, would you want to do that? So I didn't even show you my product yet. All I did was like, I framed your problem, and then asked if I solved that for this amount, would you do it? And then now all I have to do is show you what I have. Does that make sense?
Yeah, totally. I love it. That's super smooth. You mentioned about online courses. Which ones do you recommend besides your book and your classes? Which I
Well,
already
you gotta. Okay, cool. Yeah. There's the one at HubSpot on the inbound. We have a lot of inbound sales certification, that kind of stuff. I don't know. Like, I haven't really looked hardcore at the classes. I would say, I I just like consuming content.
Mhm.
Some of the books are good because by the time you write a book, you've codified it pretty well.
Mhm.
I think the old school, like my favorite, like three are pretty old school. Like,
Mhm.
have you ever read how to how to
How to win friends.
win friends and influence people by Dale
Yeah,
Carnegie?
yeah, yeah. I love
I mean,
that.
that's so good, and it was written in like 1930.
Yeah.
Like
Totally.
selling cash registers.
Mhm.
And you know what I mean? It's like
Yeah.
so that's just a really good foundational one
Mhm.
to understand the basics there. Then I would say spin selling written in the
Mhm.
80s. We
Yeah,
when we
that's a
use
good
these
one.
at Harvard when we were teaching frameworks.
Mhm.
That's a great one to understand how to navigate the discovery.
Mhm.
Challenger sales the big one these days, which is good. A lot of people like it. My only concern, it's like teach, tailor, take control. I think that's a good framework with the challenger
Mhm.
sale. My only concern is I think people on the surface, challenger sale, they interpret it as like, don't worry about discovery, just like tell the
Mhm.
buyer what they need and hope that they buy. And
Mhm.
it's just don't misinterpret challenger sale for that, because that can like really cause the industry to not do too well.
Mhm.
um and then I like, I think some of the thoughtful sales software organizations, like Sales Loft and Outreach right now put out some really good content, I think.
Mhm.
Trying to think who else. Yeah, I kind of read up on that stuff, especially like Sales Loft and Outreach, because they're promoting more selling
Mhm.
behaviors, right? And they're doing a pretty good job. Winning by Design's doing a really good job,
Mhm.
Jocko, in framing some of this stuff. But yeah, so I like to just start by like following people that I like their content, and
Mhm.
then see who they mention, and then I follow them, and
Mhm.
then I feel like I get more out of like the incremental blog and ebook reading than I
Mhm.
do just like going through courses or reading full books all the time. You know?
Mhm. Absolutely. You transitioned your career out of HubSpot a while ago. You started teaching at Harvard, now running your own fund stage 2 capital, investing with many software executives. Can you tell us more about what's a transition like for you and how do you come up with the investing concept for stage 2?
Yeah, yeah. I mean, it's. I guess Grace, I've been like becoming more of like a Buddhist lifestyle in the last like 8 years, because like as I look back on everything from like going into sales, going to HubSpot, writing the book, going to Harvard, starting a venture capital firm, I didn't try to do any of that. Like I didn't like say I was gonna. I didn't purposely do that. It's all things that like landed on my like
Mhm.
eh, on my lap, and I just, oh, that's a good idea,
Mhm.
right? So I very much just like, I guess my common theme is whatever I can do to help the entrepreneur ecosystem, because the entrepreneur ecosystem has done a lot for me, and I'm passionate for entrepreneurship. So anything I can do to help within the confines of my available time, because I'm,
Mhm.
also a dad, and I like to golf and try to stay healthy and like all that kind of stuff. So I work hard to try to deliver on it. Like, but that's everything kind of fell on my lap. So, I had been helping at Harvard, and then they just approached me and said, "Would you ever consider joining the faculty?" Toward the end of my tenure at HubSpot. So that seemed like a really humbling opportunity, and I've been really much enjoyed that.
Mhm.
And then I took advantage and would help startups every quarter. I'd help one startup every quarter, and that led to me meeting a lot of venture capitalists, and that led to me meeting my co-partner for Stage of Capital, Jay Poe, who was at Bessemer at
Mhm.
the time, and he was like, "We should start the first VC firm run back by sales leaders."
Mhm.
And I never thought I'd be a VC or start a VC firm, but
Mhm.
I was like, that is a very powerful idea, because a lot of the VCs are great at product and finance and strategy, but there's
Mhm.
not a lot of VCs that come from sales.
Mhm.
And there's a lot of really important things to figure out on the sales side in a startup. And I think because this doesn't exist, there's a much higher
Mhm.
failure rate than is necessary. So we went out, and the first fund, we had 97 heads of sales as our backers. From Dropbox and Salesforce and
Mhm.
LinkedIn and you know uh, Zoom and Asana and Drift and
Mm-hmm.
all the big names.
Thank you.
And now we're raising our second fund. We have pretty close to like 150 sales leaders involved now. So yeah, that's all in we invest when the companies are roughly around $1 million in revenue.
Mm-hmm.
Usually we invest when they're not actually raising. They just need help with their sales team. And the thing that we look at way differently than most is I find that a lot of investors put a major premium on how fast you're growing revenue.
Mm-hmm.
And I think that is in the early days, that can be problematic. And it's more about how strong your retention is with your customers. So
Mm-hmm.
we really lean into how you're doing with the retention and will help you speed up your revenue.
Mm-hmm.
So I think most investors, if you're growing 200% revenue, they're very interested in investing.
Mm-hmm.
But for me, if you're doing that and your retention's not great, I just feel like you don't have a real company. And I think that's kind of a pivot and a restart. Um, versus if you're only growing, if you have awesome retention, like 90% of your customers,
Mm-hmm.
um, and you're only growing 50%, I'm probably really interested because
Mm-hmm.
I've had a lot of success, and our team has had a lot of success in accelerating that and building a very strong company with that foundation.
Mm-hmm. Would you say they have to have their products ready and then like they already demonstrate that this
Yeah.
product will not fail and then you sort of like accelerate on the sales side?
Yeah, because the seed funds do well with helping you build engineering and product, right? We're looking for product market fit, and we have a very clear definition of product market fit. It's not $1 million in revenue; it's that you consistently retain your customers.
Mm-hmm.
I have a framework, just a definition of it is like key percent of customers achieve event in T time, right? So
Mm-hmm.
so Slack would be like 80% of customers send 2,000 team messages within 30 days. If that happens, you have product market fit. Dropbox, if 85% of customers back up their files on one device within 1 hour, product market fit. HubSpot, this was actually the real one. 75% of customers use 5 or more features in the platform within 60 days, product market fit, right? So just product market fit changed the world of the ecosystem thanks to Eric
Mm-hmm.
Ries's work, but um, everyone says I'm not going to scale to a product market fit, but everyone has a different definition of product market fit, and oftentimes it's around revenue, and I think that's completely wrong.
I feel like this is such a great concept. You can help startups to connect them to the right sales strategies and sales mentors for them to grow. I'm sure a lot of deals come to you. What's the most recent company you invested in?
Yeah, the last deal, we did 11 deals in Fund One. The last one we did was GoSite, which we announced. That's a San Diego company. They're doing amazing. Their funnel has accelerated since COVID. They basically help really small companies go online, like plumbers and landscapers and stuff. They set them up with their first website and help online booking to make an appointment and payments online and that kind of stuff. So we it's pretty. I mean, first off, more than half our deal flow comes from our investors, right? So this one came from who brought this in? Jason Finger. Jason's been an investor with us for a long time. He was the founder of Seamless Grubhub, first investor in Blue Apron, and he's just really tapped especially in the Southwest, Southern California. And so we just, it's the traditional stuff of diligence is important. Team, market size, moat development, the competition, the risk factors that are in there. But again, we look very closely at retention, and they had super strong retention, and they were also already growing fast. And all the other boxes checked out. I would say another area that I don't think the ecosystem has a good definition on is on the moat, the barrier to entry. I think when someone is getting the early traction, you're like, okay, well, how come someone doesn't just copy this? And you're like, what is your moat? Most entrepreneurs say it's a product feature, and then I'm like, okay, well, why can't someone build that in 6 months? And they're like, well, they can. So that's not a moat. That's not a moat. You know what I mean? So, it needs to be truly sustainable. There's often network effects. There's brand can actually be a moat. For HubSpot, that was kind of the moat was the inbound. as a brand. It's like they owned inbound marketing and inbound. And anytime, and everyone wanted to do inbound, and anytime a competitor tried to say, oh, we're inbound too, it just fueled our demand. Like if you're going to do inbound, you're going to do it with the creators of inbound. For Dropbox, it's more of a network effect, right? Like when people are sharing stuff. Same with Slack, it's more of a network effect. That's a good moat. With Salesforce, they have a bit of a network effect with their app exchange, right? Like that's like a platform play. That's a true moat. Amazon has a moat that's more like economies of scale. You know what I mean? Like they can do Prime, and they can get you the stuff in 2 days, and they can get it for cheap because they have so much volume. So that's a pure economies of scale play, right? So like I don't think we have a good enough understanding of what true moats are in the ecosystem.
At HubSpot, you and your team created inbound lead generation content. I remember you mentioned about hiring journalists to write blogs. For your current fund, I saw some booklets on your website that people can download. What are some other strategies you use to generate leads for your fund now?
Yeah, we used content marketing and inbound for the venture capital firm too, and it went really well. So the whole point, you have to think about what are you trying to achieve, and we're trying to probably attract 3 different types of people. We're trying to attract entrepreneurs for investing. We want to see deals. We're trying to attract new investors, right? So people who are successful sales execs that want to be an LP. But there's a minimum threshold of investment that isn't accessible to everyone. So we also have this other group called the Emerging Leaders Syndicate, which is people who will be of that level in, say, 5 or 10 years, but they still have a lot to offer to the ecosystem. They want to learn to invest. They want to help with the companies, et cetera. So we put 30 new members into that every quarter. So we have 60 in there now. We're going to go to 90 this quarter. These are the rising stars from like Gone and like Zoom and like Drift and like Asana and like the companies that are like the next set of, the next big successes. I mean, Zoom's already there. It's unbelievable. But and we put them through an investing school. We have a 12-week investing school that we teach them how to, and then we expose our deal flow to them. So the last deal we did with GoSite, we were able to get like 800,000 allocation for them to put in small checks, like $10,000 too. So not only do we teach them to invest, but we expose them to deal flow that they otherwise wouldn't have gotten access to. But yeah, we've been blogging. We originally tried to do like once or twice a week, and we were fortunate to have so many amazing LPs, investors in our fund, that I've been interviewing a lot of them for the blog, and people have been appreciative of hearing the inside stories of some of these great companies and these great leaders.
How do you manage when there is more than 100 LPs invested in the fund? You don't have to say anything if that's confidential.
No, it's okay. I can tell you about it. No, we send a monthly update to everyone. And then we write up very detailed memos on every investment, because a lot of the LPs have never been in venture capital before. They're like the CRO of a big software company, and they don't really understand investing that much in the early stage. So a lot of them want to learn. So we write up a very detailed memo for each of them. We involve at least 5 during the due diligence process, and at least 5 after, on specific areas of expertise that they bring. We have a quarterly LP meeting. And we always have breakouts in Zoom so that they can collaborate in small groups on specific topics, so they can learn from each other. So yeah, those are some of the things, and we're still figuring it out. We're still figuring out how to like really leverage the power of this network. And
yeah, it is a really powerful network. When it comes to operations, do you partner a particular company with the LP? How do you leverage this network?
Well, I take the lead on that, right? Because I know I'll spend like 30 hours, 40 hours with every investment personally, right? So I dig in and talk to the salespeople, the leaders, the marketing team, look at I do a full assessment on them. And then I'll be like, okay, like we were looking at one in the insurance space last year, and one of our LPs runs the insurance division for Workday. So I don't know insurance as well as he does, but I just brought him in for a diligence call, right? So as an example. So I know what the needs are, and I know what our team looks like. So then we had another one that they're trying to work on forecasting right now.
Mm-hmm.
And I know Larry D'Angelo at LogMeIn
Mm-hmm.
was the best forecaster I've ever seen.
Mm-hmm.
And so I just get a call with him set up, right? So I know what people's expertise is, and I know what the concerns are, and I just match them up.
Cool. We're at the last part of our conversation. I have 3 questions for you. Who made the biggest impact in your career?
Well, I guess it'd have to be Halligan, because he brought me in, situated HubSpot, taught me a lot about how to be a leader at that level.
Who would you invite to your dinner party?
I've always been intrigued by Richard Branson. I never met him, but it's like
Mm-hmm.
he seems like he finds the right balance between being a great entrepreneur and having fun. You know what I mean? Which I think a lot when you read about some of these other entrepreneurial stories, it's like sometimes they lacked a balance in their life,
Yeah.
and sometimes they were just like mean people. Like, and I think Branson seems like his brand walks a pretty good line between success and happiness and balance.
Yeah, for sure, for sure. What's your favorite book beside your book, of course?
Come on, I wouldn't say that. I would say like for professionally, The Go Giver is a great one that's not talked a lot about. I think it's just it does like represent how I live my life, which is like, when you give first, it's a lot easier to get when you need it without even asking, and that's kind of The Go Giver kind of lives within that sort of trust model.
For sure. So where can we find you if you are not at work?
I play a lot of golf, and I coach my kids'
You play golf?
teams. And I like the beach.
Nice.
So I need one of those.
Yeah, awesome, awesome. Well, thank you so much for coming on to the show, Mark.
All right, thanks, Grace.
All right, that's all we have for today. Thank you so much for listening to this episode of Smart Venture Podcast. If you like it, please leave us a quick review and hit subscribe so you don't miss any tips from the experts. If you want to receive our updates, please leave your email at smartventurepod.com. If you want to connect with me, all my socials are at Grace Gong GG. Beside LinkedIn, it's just Grace Gong. I'd love to connect with you and let me know your thought about the show. Now you can also listen to Smart Venture Podcast on YouTube. Go to smartventurepod.com, click the YouTube link on the top banner. Don't forget to hit subscribe and smash the like button. See you next time.